Now we've arguably got into the most important part of this whole video. When you start to make a significant amount of money from your trading through increasing your funding, through increasing the amount of money you trade, through increasing your payouts, and then eventually increasing income through a positive sum business as well, you then want to take at least 10% of that income and put into savings. You want to build that cash cushion of 6 months worth of cash savings. But at least more than 10%, 10% or more has to go into savings. Your savings is how much you value yourself. And then at least 10% goes into that first. And then after that, you can pay whatever needs to go into taxes, and then you can pay into expenses, whatever needs to go into expenses. Now, once you've built your 6 months worth of cash savings, this is general financial advice, by the way, not specific. Advise and talk to someone that is a specific planner for your specific situation. I'm just sharing what I do and what I know has worked for me. But once you have your 6 months worth of cash savings, any income that comes in above that 6 months worth of savings goes into investments, low cost index funds, income producing assets. And you want to automate this. You want to take a fixed dollar amount, and every month you want to go in and buy low cost index funds, the same dollar amount of low cost index funds every month. And you want to automate it. And you want to force your investments in that and let it compound every month, every month, every month, let it compound. And at first, it may not look like it's doing much, but eventually compound interest will kick in and you'll reinvest your dividends and it'll start to grow and grow and grow. And after 10, 20, 30, 40 years of compounding, you're going to have a serious sum of money sitting there that eventually what you can do is you can open the tap and you can use the dividend payouts that you earn passively from your investments to cover your expenses. And you no longer need income in the form of this because you've built and got money working for you, and that covers your expenses. Now, anybody that's questioning the slow growth of low-cost index funds, for example, I encourage you to go into ChatGPT and say, all right, ChatGPT, I'm going to go in and buy $1,000 a month worth of this low-cost index fund through Vanguard, and I want you to reinvest the dividends and let it compound for 10, 20, 30, 40, 50 years, and I want you to tell me what my portfolio is at the end of that 10, 20, 30, 40, 50 years, and have a look at the numbers. And then say, all right, if I increase how much I contribute by 10% every quarter, now run the numbers again. And you want to see that the more you put into your investments, the more significant amount of money you're going to make as a trader over a long period of time. And you're going to get compound interest on your side. You're going to get your money working for yourself. And eventually you have a serious pot of income there, money invested in stocks, millions, that eventually you can live off the dividend yield from that. It covers your expenses and you have financial independence as a result.